Well, that joint venture between First Solar and SunPower could result in an entity known as a Yieldco, where the capital generated from the Yieldco is used to fund new power projects. It's a new type of investment and a growing trend in that industry. But as Brennan explains, even though they're relatively new and there are only a few of them, Yieldcos are getting a lot of attention.
First Solar and SunPower said they're in advanced talks to spin some existing assets out into a jointly held venture, shining light on a new type of investment, the Yieldco. Yieldcos are a lot like master limited partnerships, but for power instead of energy. They consist of assets that produce income from long-term contracts with utilities, in many cases, the very ones they've been spun out from. In turn, the majority of that income is paid out as dividends, one reason the group's gaining popularity among investors, and why First Solar stock soared on the news.
The Yieldcos are trading at roughly 2 times what companies are selling projects into the market at. So if you do the simple math, it's about $14 of incremental value to First Solar stock. So theoretically, people just do the simple math without disclosure, you're going to get to roughly a $63 stock.
Unlike MLPs, which claim a tax-advantaged structure, Yieldcos are C corporations, though many do enjoy tax benefits associated with alternative energy. Companies, including First Solar and SunPower, are doing this because it's an inexpensive way to raise capital for future projects. And given their relative stability, these assets can command a premium. NRG Energy was the first to spin out holdings in this way into NRG Yield in 2013. Since then, several others have followed suit, including SunEdison, which took Terraform Power public last summer. Industry executives would like to see the concept catch on even more.
We need more investors to come into the space so that we are more valued. I think as more people come in and there's more float of various Yieldcos, I think we'll be recognized more and our stock will go up. MLPs, there's like 130, 140 of them. I really would like to see around 20, 30 Yieldcos in the space.
But there are risks in the small floater. Lack of liquidity is one of them. So is the fact that Yieldcos, like utilities, are vulnerable to rising interest rates, and that growth is dependent on the future success of the parent company's project pipeline. Still, investors seem to have taken a shine. So far this year, Yieldcos from Next Era Energy Partners to Ab and Go Yield to Pattern Energy Group are all up double-digit percentages. For a Nightly Business Report, I'm Brennan.